From Twitter in the US to Latinusa, the tin, coil and sheet producer in Indonesia, all in the space of one day. So in the first quarter, a big slump in sales growth, but that's because of a very high base a year ago. The coil growth minus 17%, the plate minus 35%. But we see, if you look at the sales, it's kind of that weird up and down, but we think after a lower second quarter, the sales will come back up into next year. So the cash flow is a bit, here we've taken out the working capital. So the working capital was very negative. Now it's come back to positive. If you take that out, the cash flow was actually positive before, but because of the working capital it was negative, and then the reverse happened in the last 12 months because of the sales slowdown. But with neutral working capital, the sales growth, we get free cash flow bouncing back to positive again in the next 12 months. And then the balance sheet is net debt all the way. Hasn't really changed much, but it's been creeping up a little bit in the last few quarters, and with our forecast cash flow it will improve a little bit further. Profit is affected by a big FX loss in the first quarter, so that should bounce back, but we're not including that in our forecasts. And the cost ratio has been pretty stable, about 98%. So with that, we would get a return to net profit, excluding FX, in the next 12 months. In terms of valuation, so we've got a small free cash flow with no investment spending, and then using our valuation 1.6% with a quite small discount, 30%, we get a target price slightly higher, 593. The share price has been much higher before, so it's going to be interesting to see what happens if the sales, the cash flow and the balance sheet start to improve.